Whoever wins this federal election, whether it's Labour or the Liberal Nationals, it will have a material impact on Australian house prices. And why? It's just because Labour has released a policy that will kind of blow your socks off. And in this video, we'll be going through that policy and why it will have such a material impact on property prices. If you're a property investor or you want to become one, or just a homeowner or want to become one, you're going to want to stick around for this one because it's the biggest thing that's happened in about 4 or 5 years in federal politics for house prices. Carry on watching. My name's PK and I help people build passive income and wealth through Property Investment Accelerator Mentorship Program using data, all right, without needing a $15,000 buyer's agent. And this channel helps you get ahead through property investing, through understanding the economy and achieving financial happiness. So give it a subscribe, turn the notification bell on, and give this video a thumbs up. Let's get into it. So here's the announcement from Labour just a few days ago, right? And what they said was Labour announces shared equity scheme for home buyers ahead of federal election. It's a little bit similar to what the government has been doing for yonks in the UK and house prices. We all know how ridiculously expensive they are over there. So let's get into it. I'll explain what it actually means and then I'll go through the impact on house prices in different regions across Australia. So federal Labour has detailed its housing policy where it's offering to help 10,000 households get into a home. Okay, this is their way of sort of saying, guys, vote for us. We're going to help affordability. We're going to get you into houses where you couldn't previously afford them. So they've outlined this thing where they'll essentially be buying or contributing 30 to 40% of a property. They'll have a part ownership in that. How that's going to work is that that portion will be owned by the government, okay, and could be bought by the homeowner over time if they wanted to, okay? And Labour estimates that it will cut the cost of a new home by up to $380,000. Now, they're saying it's going to make affordability improvements by a quantum of $380,000. What they're actually doing, and look, no one's stupid, right? Labour is also not stupid. Their political angle is to say, guys, vote for us. You can't get into a property now. You're outpriced. Vote for us. We'll get you into a property. What is actually going to happen is they're throwing money, going to co-contribute towards buying property, and house prices will go up by this quantum. I'm not saying everywhere, but let's get into that in a second. All right, so we know that the Liberal Nationals traditionally have been pro-housing, pro-property. That's, you know, the side that they lean on. And Labour has previously said negative gearing, we need to cull it because that's what makes housing unaffordable. That's why they lost the election last time. This time they've completely changed their tune and become a little bit more like Liberals, if you ask me. And what they're doing here, according to Labour, 10,000 spots will be initially made available in the scheme. And that would open for people that are earning less than $90,000 as an individual or $120,000 as a couple. So if you're making less than $90,000 and you're single, or less than $120,000 and you're as a couple, you're eligible. And they've said that it's initially going to be made open or available for 10,000 households. Now that's initially. This could be every single year. May not seem like a lot, but in this kind of price range that they're talking about, you know, I'll get into the exact price ranges per region or per state in a second. This actually constitutes about 20, maybe even 30% of property purchases or property transactions. So it's a big deal. All right, it's a big deal. And also the scheme would not be restricted to first home buyers. Okay, it's not like a first home buyer scheme. It's just anyone who doesn't own a property. So if you previously bought property, sold it, you know, you can still get this money. All right, so under the proposed scheme, those buying a property could have the government cover 40% of a new home or 30% of an existing home. All right, and the buyer would be left to purchase the remainder of the property with a minimum deposit of 2%. That doesn't sound healthy to me, but it's a minimum of 2% without having to pay lender's mortgage insurance. So what does this mean? It means that if I couldn't previously buy a $400,000 property. I could only afford a $250,000 property. Now the government has just helped me get a $400,000, $500,000, maybe even $600,000 property. If I couldn't previously afford a $700,000 property, now I can buy a $800,000 property or a $900,000 property. Do you know what I'm saying? So demand is going to increase across Australia because of this national policy. They're saying it's a policy to curb housing affordability crisis. What it will actually do is even exacerbate the housing unaffordability crisis in the long term. Short term, great, everyone gets a home, but it's funded by the government. And this sets a precedent, very dangerous precedent, where now if Labor gets into power for years and years and years, this will just become the norm. So the government is basically printing money, piling it directly into the housing market. They've done that indirectly before. Now they're doing it directly. Like one of my mates said the other day, not my quote, but it's like a beer funnel, right? It's like, the government is literally funneling cash, printed cash, straight into the housing. What do you think's going to happen? Price is going to go up regardless of what happens to interest rates. This is unprecedented demand. Let's see what the thresholds are. So for New South Wales, capital city and regional areas, the property price cap to be eligible for this is $950. So you're in Sydney, right? You're like, well, $950 doesn't get you much. It might not get you much in Sydney, but it includes regional centres, all right? So Wollongong, Newcastle, other regional centres in Newcastle, in New South Wales, Orange, Bathurst, Tamworth, so many, they're going to experience, I'm not going to come out and say they're going to go up by 30 to 40%, but chances are real. All right, and then super regional areas up to 600. Victoria, capital city and regional areas like Ballarat, Bendigo, Geelong, etc., maybe even Warrnambool, 850. That's a huge cap if you think about it for regional areas in Victoria. Rest of state 550. Queensland, 650 doesn't get you that much anymore in Brisbane. That includes regional areas, Gold Coast, Sunny Coast, Toowoomba, etc., etc. And then rest of state. And this is Queensland rest of state. This is very healthy. All right. Like Queensland regional areas aren't really this expensive. WA, etc., etc. So what does this all mean? Okay, let's boil it down. Now, I know that you fully expect a property spruiker or someone that's trying to, prop up the property market for their own self-interest, aka people like me, to say the property market's going to boom. But just make your own conclusions. I try to be objective. I try to be independent. I try to look at data. We don't have any data for this yet and how it will impact property markets. But I can tell you that even despite interest rates rising so far, there's still a lot of demand across Australia in the property market. In Sydney, Melbourne, it's dropping. And this is going to further add fuel to the fire. I think in many regional locations, especially in Queensland, especially New South Wales, and especially in Victoria, these regional areas that are now worth 300, 400, 500, they could well be worth 600, 700, 800 in the next 2-3 years. And if this carries on, as a property investor, we don't want to experience a constant boom. That's not healthy. We don't want to be in a bubble, but we want steady growth of 5 to 7%, maybe 7 to 8%, 9%. Short term, we want huge growth, but we want the market to be, sustainable. These policies are really not great. Yes, it's going to create a boom for some areas, but it just ruins it for the rest of everyone. Everyone who's not a property investor, it just means that our kids they're going to have no chance to be able to buy a property. Inequality is going to get wider and wider, and even though wage growth isn't increasing, the property market will continue to do well if the government just injects money right into it. All right, so that's the reality. You make up your own mind. Look, I just want to say as well, there's an affordability crisis, and I don't want to be that guy that's sort of always saying, become a property investor, become a property investor, become a property investor. But I just saw this quote the other day, and I want to read it out to you. We're not ahead or behind anyone else. We're not better or worse than anyone else. We're each on our own journey. Okay? Just connect with that point. If you want to use property investing to get ahead on your journey, it's still a fantastic time, especially with news like this. But property investing is not for everyone. But the only thing I'll say is in 10 years, 20 years, 30 years, you might regret not investing in property because prices ain't coming down. based on history, based on what's happening globally, and based on precedent in other mature, developed housing markets over the long term. It's such a blue chip sector in Australia. My name's PK. Level up, leave links below to the Facebook group, 15,000 people, my podcast, and really understand, educate yourself, because this is life transforming stuff. But this policy, it's garbage, but it will do well for property investors. Catch you later, guys. Subscribe, give it a like, and all that good stuff. Catch you later. Bye.